Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. It's a green-looking screen right now. Midcaps and Nifty Bank, they have made a comeback. And the Nifty, after recovering from the lows, has stayed on those levels of 25,400. Interesting times and a lot lined up on the show.
That's right. Markets near and flirting near all-time high levels once again. So nothing much to complain about. Quite a lot lined up on the show. Let's start off with the top headlines. Stocks see some broad-based gains ahead of the US Fed interest rate decision this week, but are off their opening highs. Metal and consumer durables are the big gainers, even as financials and FMCG drag. Midcaps fare better.
Bajaj Housing Finance lists at a price of 150 a share, and that's a gain of near 115% over its offer price of 70 rupees. Chairman Sanjeev Bajaj says he expects the industry to grow at a healthy 12 to 15% a year. Peers Canfin Homes, Aavas Financiers see profit booking today.
KRBL and LT Foods surge over 6% after government removes the minimum export price for basmati rice. Decision taken in light of adequate domestic availability and trade concerns.
Lumax Autotech surges over 6% after it acquires 60% stake in Green Fuel Energy Solutions for 133 crore rupees, forays into green and alternate fuel segment. Okay, so it's a lot about the mid-caps today. It's a lot about new records again. So there was a peak that was touched, but again, we came off from the highs. We are attempting a recovery yet again. So the Nifty is up 40 points. And we have the mid-caps as well, which are up around 260 points as we speak. The Bank Nifty too is contributing to the gains that we are seeing right now. So it's an all-round improvement across the board on the markets. Nifty Metals, the top gainer, CPSE index doing well. So a lot of them have made a comeback right now. It's only the FMCG space which is seeing some profit booking, but that's understandable because of the run that those stocks have seen so far. But looking decent so far, Vivek.
That's right. So talking about FMCG, very good run. So seeing a bit of profit booking, also some slightly moderate, negative news, so you could call it, on the back of the fact that there has been a customs duty hike for one of the key, import materials as well. And that is also something that has taken a little bit of the sheen of the rally that we saw in the FMCG space. Quite a lot lined up in terms of what exactly is moving around in the session. And Hormaz is standing at the wall to take us to the top mid-caps that are moving in the session.
Well, if it's a day of record highs, the broader markets can't be left behind, and there are plenty of movers within the broader markets on the gaining side as well in today's session. And I can't not talk about BSE because that is growing from strength to strength. Now 16% higher for BSE at the highest point of the day. A very sharp surge seen in the last few minutes of the trading session. Dixon Technologies as well moving towards 14,000 now, 6% higher there as well. And the two Adani Group companies, similar gains almost of around 6% each after the order that it won from Maharashtra. Moving on then, some other stocks in focus, and a slew of block deals took place earlier this morning. India Shelter Finance 7% down after that block deal. Edelweiss had a block deal on Friday. It had one today as well, off the highs of the day, but still 6.5% higher. And Easy Trip as well, off opening highs after a block deal that took place, 0.5% lower currently. Some stocks that are reacting to some positive brokerage commentary, and Stovecraft is the one that stands out among them, 5% higher on the stock. Macrotech as well, Nomura initiating coverage there, 3% higher, and positive reaction seen in Shilpa Medicare as well. Stocks that are doing well on the back of heavy volumes in today's session, the rice-based stocks, KRBL now 6% higher. HEG and Graphite both are doing well in today's session, as is Triveni Engineering and Thermax after that order win, gaining on very strong volumes. And lastly, some underperformers, unsurprisingly, from the FMCG space, as Vivek was just highlighting. LIC Housing is one of them. Emami, Honasa and Varun Beverages almost at the lowest point of the day, seeing losses of anywhere between 4 to 5%. Back to you guys.
All right. So those are some interesting names that are moving around in the broader markets, a sector or a segment which is doing really well otherwise today. Thank you so much for that. Let's welcome Ashish Kyal from Wave Strategy Advisors for a technical check on the markets. Ashish, do you think Nifty will attempt that peak again, and we are going to see higher levels from here on today itself?
Hi, afternoon to you and all the viewers. If you look at Nifty, we saw a very sharp rise on the last Thursday expiry, which took majority by surprise. And then post that we are consolidating, and the consolidating range is very narrow. If you look at it, we have been moving hardly in a range of around 100 points. So overall outlook is bullish. I think it's a good consolidation. Any break above today's high around 25,450 will continue the uptrend, expecting a target of around 25,600 on the upside. and the support for Nifty comes around 25,200 odd level. So the overall outlook is bullish. We can clearly see sector rotation happening. We can see different stocks participating, and that's a very positive sign. What is good is also looking at Bank Nifty. Bank Nifty is taking the charge here. Bank Nifty is up by nearly 250 points already, and it's giving a very strong movement on the upside. Where Nifty has touched a lifetime high, I think Bank Nifty is still substantially away from that. So Bank Nifty is going to take a lead from here, and I think Bank Nifty should head towards the level of around 52,600 levels. And that's the overall view on the index. And if I have to talk about stock specific, HEG has shown a very strong bounce back in today's session after a lot of consolidation of past few months. And I think HEG is headed on the upside towards the target of 2310, and one can maintain a stop loss of 2075 on this stock. And the other stock is Vedanta. We can clearly see over past 3-4 days a constant bullish candle formation happening there. The stock is most probably going to break 480 levels, which is the resistance level. It looks like momentum is strong, and we will break par that, and we might reach towards 520 on the upside for Vedanta, and one can maintain a stop loss of around 450 levels on the downside.
Thank you so much, Ashish, for giving us both your index views as well as your individual stock picks for the day. Let's now slip into a short break. The management of Pokerna joins us next to discuss their business outlook and the way forward for the company. Welcome back to Midcap Radar. Hormaz just a while ago highlighted about how exactly BSE today was surging in the session, seeing a very strong up move. The stock, Bombay Stock Exchange, that's listed. Along with that, if you also have a look at MCX, Multi-Commodity Exchange, that stock too is doing very well in the session today. So exchanges today are doing quite well. IEX is largely flat. But as promised, we have the management of Pokerna. Remember, the stock has surged more than 120% in 2024 so far. It has reported a decent set of Q1 FY21 earnings. For FY25, the management expects revenue growth of 15 to 25%, and margins is expected to be maintained at 30 to 35%. To discuss this and more, we are joined by Paras Kumar Jain, CEO of the company, who joins us now. Good afternoon, Mr. Jain. Thank you so much for joining us. First up, like you mentioned, could you reiterate your targets as far as FY25 is concerned? Could you break it up for us in terms of the two divisions? And also, when do you expect profitability to revive? We understand that the US business currently is undergoing a bit of pressure.
Thank you for having me on the show today. So coming to your question, quartz business, as I told on your previous show also, we expect 30 to 35% growth coming in. So we expect largely the growth coming in the bottom line. And also we expect a close matching growth coming on the top line as well. Granite business, which is another part of our company, we don't expect a larger growth. We expect the division to be muted. But we think that overall the consolidated would make up for whatever we are losing in the granite part, because we believe that the quartz business is poised for a good growth in FY25.
Okay, so Mr. Jain, will the decline in granite be as much as you saw in Q1? It was a 64% decline that you saw. Are you seeing any sort of improvement in that particular segment?
We are not seeing much improvement in granite, so I don't think that the numbers would be better than what you saw in the last quarter. But overall, the business sentiment on the granite side has been very muted. But we believe that on the quartz side of it, the things are pretty strong. So we think that we'll make up on the quartz side.
Mr. Jain, in a recent analyst meet, you've actually highlighted two products, two systems. The first system is the Krios system, and the other system is the Chromia system. And you've also highlighted by the end of this month, you're expecting them to come on stream. Number one, can you tell us, what is the kind of capex you've incurred, to roll out these two new systems? Along with that, what is the visibility as far as the revenues are concerned, and when does the revenue actually kick in?
Okay. Krios system is expected to be commercialized in Q3 of FY25, which is the next quarter. And Chromia system is expected to be commercialized in Q4 of FY25. So let me give you a little background on Krios and Chromia. So Krios is basically a new system of distribution of material which helps us to produce more exotic designs than compared to the existing distribution system what we have. and Chromia system is for making high digital printing on the slab. So both these technologies are expected to be ready by the end of this year, because in Creos, after the commercialization, there's going to be some R&D phase as well. So we don't expect a larger revenues to start rolling out from these two in this financial year. We expect mostly the contributions to come in the next financial year. So we are expecting some incremental net value realization on this product. So I don't have the right numbers yet because the R&D is still in progress.
But is there a ballpark? I know if you can't give us the exact figure, some number that you have in mind that you'll be able to achieve next year. This year, as you said, you won't be able to get the full benefit, but in FY26, what kind of numbers are you looking at from these two systems?
So we expect that Creos would give you a 10 to 15% incremental realization on the product side of it. Chromia is more of a digital printing, so we'll have to see how because Chromia has also got to do with this producing thinner slab, which is again a different market. So Chromia would help, both Creos and Chromia would help us to also get into a new product segment. So there the realizations are completely not yet anticipated. So it will take some time to give me some color on the Chromia side, but on Creos, between 10 to 15%, we are expecting the realizations to improve on those product sides.
Okay. Mr. Jain, let's talk about EBITDA margins. You're expecting it to sustain in the range of 30 to 35%. And also you did mention that shipping and freight expenses continue to remain quite elevated. As of Q2, what is the kind of impact you're seeing from shipping as well as freight rates? Has there been any delays because of the supply chain situation? And do you expect Q2 to see an impact on margins because of these above mentioned developments?
See, the freight expenses continues to be challenging because of the situation both with the Red Sea and the container allotment, primarily coming because of the increased demand in China, which is taking most of the containers, and then there are shortage in the other market. So there has been delays in terms of recognizing some revenues because the materials are at ICD and we are not able to recognize those revenues in the last quarter. Situation has improved a little bit, but not completely, because the freight rate continued to be high. And the customers sometimes try to push out the deliveries because they think that the freight may come down in the next month or so. But overall, the situation on the freight side is continuing to be challenging as it was on Q1. And overall, we think that even on the import side, because we have a bit of imports also coming in for raw materials coming from different parts of the world, predominantly Europe. So we are also ending up paying a little more than what we usually pay on the freight side. I should say not little more, but much more. But overall, because we have the ability to pass on the freight on the export side, so we are able to pass on that to the customers. So we expect that the EBITDA margins will not be impacted. And in fact, with the product mix and the new designs what we have developed in the recent past, we expect the EBITDA margins to be better than what we are currently assuming in 30 to 35% range.
Mr. Jain, can you give us a sense of how much higher are those import costs? What percentage of your total raw materials are being imported? And in the export market, are customers delaying their decisions? If yes, how much of sales are getting impacted because of that? Specifically in the US, because you had spoken about some demand concerns there earlier.
Yeah. So basically, see, if we were paying $500 for a container from Europe in the past, now we are paying over $2,000 and sometimes $3,000 also. So that's the amount of difference what is happening on the freight side of it. On the export side of it, we don't have most of our customers delaying, but there are very few customers who are delaying the deliveries. And I think we've been able to maneuver that also. So I don't see major challenges on the delivery side at this time.
Mr. Jain, one last quick question. Any update on the sale of the apparel business? Q1, you said you are looking to divest that business.
Yeah, so we have not yet got any offer which is to the management's acceptance. So we are continuing to look at that business to scale it down as much as possible. So in fact, since it's a discontinuing operation, there are hardly any expenses out there. So we have brought to a level where we don't really incur a huge amount of cost every month.
Okay. All right, Mr. Jain, thank you so much for joining in today with all those details and the outlook on the business going forward and what's happening with the export markets as well. That's Pokarna Limited. The stock is up 120% this year, though today we are seeing some red on the stock. Let's slip into a short break. When we come back, we'll get you more on the markets and we'll focus on Lumax Autotech in our Midcap Spotlight segment. Stay tuned for that. Welcome back. So the markets are picking up pace. Usually talk about mid-caps on the show, but you have to look at Nifty. It's up almost 60 points right now. And some of these names, the likes of Reliance Industries, you have L&T, there's Infosys, HDFC Bank, these heavyweights are the ones which are supporting the Nifty from the lower level. So those names should come up for you on the screen. L&T is at the day's high. You'll get Infosys as well, and HDFC Bank is the other one, which is helping the gains on the Nifty that we are seeing right now. Mid-caps continue to outperform, up around 250 points on that index as we speak. But this is our special segment, Midcap Spotlight. Winnie will focus on Lumax Autotech. Is buzzing in trade today. Companies forayed into green and alternate fuel segment. Winnie, tell us more.
Absolutely. The stock is buzzing in trade today, and it's trading at a one-month high level as well, up as 6.5% as of now as we're looking at it. Lumax Auto actually forays into this green and alternate fuel segment. They've acquired a company, 60% stake in a company that is Green Fuel Energy Solutions for 133 crore rupees. Now, this is almost a majority stake that they've acquired in this company. What does this indicate for Lumax Auto? One, opportunity to expand as well as diversify in the range of solutions that is provided in automotive OEMs. Green Fuel has a good clientele as well, a marquee clientele, whether you look at a Maruti Suzuki, that's there, Tata Motors, Volvo, Eicher, that's VECV, that is of Eicher as well, that is also one of the clients. That's a big clientele, they can leverage a lot of opportunities, both the companies together. And the CNG market itself, the vehicle market for alternative fuel, that has been growing at a very fast pace. The government is focusing on such things, and that is why this could see a good up move for Lumax Auto going forward as well. Green Fuel Energy Solutions has managed to see a revenue of around 214 crores. Will be interesting to watch out for the synergies that will come in for Lumax Auto going forward.
Thank you so much for that, Winnie. Stock high by almost 6.5% after that acquisition. But moving on, a whole host of pharma as well as healthcare stocks today are buzzing in the session on the back of brokerage notes. Ekta joins us to tell us more.
Well, I'll start with Shilpa Medicare. Antique has initiated coverage with a buy and a target price of 1,300 odd rupees. They expect key growth drivers to be new launches in API coupled with GLP-1 products, scale up of existing non-oncology API with new market approvals, exclusive CDMO supply agreements for 4 years with the pharma company Unicyve, and capacity building up in higher revenue generating businesses such as biosimilars and biocare. Their estimated revenue is expected to grow around 34% CAGR over FY25 to FY27 and drive EBITDA margins to 35% by FY27 according to Antique, and offer an EPS CAGR of over 100% on a low base. Max Health is in focus as well because they did announce an acquisition of 64% in JP Healthcare for an EV of around 1,600 crores. Now, Kotak has written on it. They have a reduced and a target price of 875. They view the deal positively. This is given the attractive Noida market, and they would closely monitor Max's plans to ramp up to 1,200 beds in Noida over the next few years. The stock, according to them, is trading at around 31 times FY26 EV to EBITDA. Lastly, Kotak has also written on Concord Biotech. They've downgraded the stock to reduce target price 1950. According to them, the top line growth over the past few quarters was driven by low margin formulation segment, and they do not expect any major delta on overall earnings.
Thank you so much for that, Ekta. A whole host of stocks from the healthcare space in focus on the back of those brokerage notes. But with that, it's all the time we have on this edition of Midcap Radar. Having a look at the market, just before we wrap up, Nifty, higher by 0.2%. Like we mentioned, some of the exchange stocks today doing very well. So BSE, that is Bombay Stock Exchange, up almost 15%. Also have a look at MCX, that is another stock that we mentioned doing very well. On the other side, or on the flip side, after the listing of Bajaj Housing Finance, some of the other housing finance companies today are seeing quite a bit of profit booking. So if you look at names like Canfin Homes, LIC Housing Finance, some of these stocks today have taken it on the chin. Even a PNB Housing Finance, for that matter, on your screen, down over 5%. But with that, it's a wrap on this edition of Midcap Radar. More stock-specific action when we return.